Now, for the uninitiated, Bitcoin is cash that exists only online, and it can't be controlled by any country's central bank. In December last year, its value rocketed to 10 times what it had traded at just a couple of months before. Since then, as you can see, the graph's gradually come down, decreasing to be worth a little over $400 per Bitcoin. Alongside that, more and more online shops are accepting it. Bitcoin cash machines have started springing up around the world. So the question is it a good place for adventurous investors to park their money? Or the best way for techies to shop on Amazon? Or is it even traceable enough to be a dream currency for a black economy? Well, joining me to discuss this, Michael Parsons, who's a banking management consultant who advises on Bitcoin. And via Skype from New York, we have Jeffrey Robinson, who's written Planet Bitcoin, a book that's called The Debunking of the Industry's Myths. Jeffrey, you suggest this is more worrying than some kind of Ponzi scheme. Tell us why.
Yes, of course I do. First of all, the book is called BitCon, B-I-T-C-O-N, The Naked Truth About Bitcoin. And the reason I'm worried about it is because when I pulled the curtain back and looked at all the hype and misinformation and the spin that's out about Bitcoin, what you see is not what you get. In fact, there's no there.
Michael Parsons, do you share Jeffrey's misgivings about what Bitcoin might be about?
I think Bitcoin is the world's first private digital currency, and it is still very much in its infancy. It is an experiment, and the stage of Bitcoin now is the same stage we were at the internet in 1992. And to say that Bitcoin has no value, the same statement can be applied to the existing fiat currencies. They have no value. They have no backing, and they only have value because they're made legal tender by governments.
Jeffrey, you're shaking your head.
Utter nonsense. Michael, utter rubbish. First of all, it's an experiment that so far has failed. If you look at Bitcoin as a weighted currency against all the other currencies in the world, it is basically a non-event, including the trading, the buying and selling of goods and services with Bitcoin. It's a non-event. The market cap right now for Bitcoin is about $5 billion, $5.2 billion. That means it can't stand toe-to-toe with the non-convertible Cuban peso. At its biggest time, at its biggest market cap, when it hit $1,240, which was a pump and dump scam orchestrated by two bots in Japan, when it hit $1,240, it came in a distant second, not even a close second, but a distant second to the Uzbekistan sum. To say that we can say the same thing about the beginning of the internet is true. We can say the same thing about the beginning of 8-track and Betamax and Edsels. The fact is, it is not what people think it is.
Okay, Jeffrey, hold it there a second. Michael, try and reassure us then. Jeffrey's cast some aspersions. Why should we have any confidence in this?
I think Bitcoin is just the first iteration of what will be a raft of digital currencies. I think what Bitcoin has given us two things. It's given a new way of creating money or making money, and I think Bitcoin is the poster boy, and I think Jeffrey will agree with this. It's not going to be the final iteration, and Bitcoin may well fail in the future. But what Bitcoin has given the world, something very important, it's given us the blockchain. So we're now seeing what I call the blockchain revolution.
OK, now I think you two can probably agree about that. Jeffrey in a minute, but just, Michael, let me stay with you. Can you just explain this blockchain? Because it's supposed to be quite smart technology here.
Well, what the blockchain is, it's a decentralized, programmable blockchain, and when you put transactions on it, they're all in the cloud. As Jeffrey has said in his book, you can do smart contracts, you can have voting on the blockchain, it's controlled by mathematics, it's very fair. Bitcoin is the first and so far only iteration on the blockchain, and there are a number of very smart companies looking at the blockchain to do things like clearing systems, even to create new digital currencies.
And Jeffrey, you would agree with that, would you? That blockchain is good, that's sound technology.
Absolutely, but the problem is there are two Bitcoins. There's Bitcoin, the blockchain, which is absolutely revolutionary and will change the world. And then there's Bitcoin, this pretend currency, which is a charade and a mirage. Now, when you're talking about the blockchain, no doubt about it, and Michael is right that this is the beginning of our digital currency world. But the fact is, he used the word decentralization. It's all well and good to have decentralization, but the big kids are now getting into the blockchain. the work being done in the Silicon Valley and the work being done in Britain. I know of a major project in Britain on the blockchain that has nothing at all to do with currency. It has to do with building a business that people will use because it solves practical problems. And when you get into the idea of solving practical problems, what you're talking about is dollars and pounds and euros, not this funny money currency, pretend currency called Bitcoin, which is based on thin air and actually has no intrinsic value at all, as opposed to the pound and the dollar, which is legal currency and therefore has value.
Well, Michael, just explain what Jeffrey's trying to say there, because on the face of it, it does have a value. If there's a cash machine and I have some Bitcoin credits, I can get real dollars or real pounds out of a machine, can't I?
Well, if you look at Aristotle's definition of money, he says money has to pass 4 tests. 1 is durability, 2 is portability, and 3 is divisibility, and 4 is intrinsic value. Now, we could argue whether Bitcoin has got intrinsic value. I would say it has by its use. It's currently worth about £236 per Bitcoin. So it does pass the Aristotle test for money. That being said, it is very, very small, and it's a pinprick in relation to the world's fiat currencies.
Jeffrey, it is being used, isn't it, in many of the investment programs, like Kickstarter, for instance. You can invest in Kickstarter on Bitcoin?
Well, wait. First of all, Aristotle is dead and no longer matters. There is a definition of currency, and Bitcoin, the pretend currency, fails at every level of that definition. Furthermore, there is no such thing as circular flow of income with Bitcoin, which means that every time somebody uses a Bitcoin, it is not the purchase of an item that then gets spent on the supply of goods and services by the seller. It is a dead-end sale. It is the sale of Bitcoin. And if you look at the transactional use of Bitcoin, it is minuscule, absolutely minuscule. I mean, Michael, I'd love to hear Michael tell me and your viewers how many people actually have Bitcoins. How many? Give a number.
Michael?
Less than about active users, probably less than 10,000 people in the world, active users. Apparently, it's about 4.5 or 5 million wallets.
Well, 5 million wallets, which are 5.8 million wallets, which are mostly empty, and people have multiple wallets.
I agree.
Now, Coinometrics
Yes.
actually had a figure. Yeah, Coinometrics in Cambridge came up with a better figure. They said there are 250,000 people holding Bitcoin. You understand that is fewer than the members of the Kuwait Airways Frequent Flyer Club. We're talking about nobody on a global scale. Globally, it's non-event. Now, let me say this. Digital currencies and digital payments are the future. Absolutely, there is no doubt about that. Bitcoin is a stop along the way. It's part of a process. And if you look at what happens to technology, how long does technology actually last? Until something better comes along. We're talking about 2, 3, 4 years.
Sure.
I promise you in 5 years' time, we will be talking about the blockchain, and Bitcoin, the pretend currency, will be thought of as pogs and pet rocks.
Jeffrey, let me just ask you about this. Both of you, actually, about the anonymity involved, because there is maybe it's a simplistic headline, but the headline is Bitcoin is a way of laundering money, and therefore the dark side of the world, or villains, or gangs, or terrorists are using it. True or not true? What do you think, Jeffrey?
Well, you know very well what I know about laundering money, and I've written several books, including Laundryman, which is the definitive book on money laundering. And what I say in BitCon is that Bitcoin is a lousy way of laundering money because you don't actually launder it. It, however, is a very good way for criminal finance, tax evasion, and for capital flight. For moving money, it's terrific. For laundering it, it actually is awful. But it is the currency of the dark web. If you want to go down into the dark web and buy your drugs and your arms and your kiddie porn, you need to have Bitcoin. Which I don't actually condemn Bitcoin for that, because you can buy drugs and kiddie porn and arms with pounds and dollars. So that's not the problem. The anonymity question is.
Why would you have your clients involved in this rather dark, murky world then, Michael?
Well, I think the dark, murky world, as Jeffrey has said, is a very, very small part of it. I mean, most of the activity on money laundering is used in cash, and if we want to stop all the money laundering, we should stop printing £50 notes, €400 bills, and $100 bills.
Well, yes and no. 500 euro notes, absolutely. But no, that's not how you stop money laundering. There are other things. It's much more complex than that. But I don't blame Bitcoin for money laundering. It's very, very good for capital flight and criminal finance. But that's not the problem with it. The problem is the hype and the misinformation and the spin. And I mean, if you listen to the Bitcoin Foundation and what they put out, these are a bunch of self-interested snake oil salesmen trying to goose the price up so that they can sell their Bitcoins for a higher value.
Jeffrey, we'll have to leave it there for today. I'm sure we're going to return to this. Jeffrey Robinson, Michael Parsons, thank you both very much.